Welcome. In this video, Zbcn price can make a 1,230% rally increase. But when? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
The moments when the price touches an ascending trend line are among the most important points in technical analysis that investors pay attention to and that contain the most opportunities in the market. Because the existence of an upward trend shows that the overall structure of the market is moving in a positive direction and that buyers still dominate. Trend lines reveal the repetitive nature of price movements. They carry the traces of the collective psychology of market participants. For this reason, when the price touches an ascending trend line, it often serves as a test and confirmation. Investors see a high probability that the price will react upward as a result of this touch, because a trend line is like a defense line that has been repeatedly protected by strong hands in the market. Every time the price touches this line, buyers step in again, reinforcing confidence and proving the strength of the trend. The price moving above an ascending trend line shows that buyers are determined as each dip makes higher lows. At this point, investors focus on how the price will behave at the trend line. If the price strongly touches the trend line and then makes an upward bounce, this confirms that buyers still control the market. Such a rebound is not only technically valuable but also psychologically valuable, because thousands of investors in the market are watching the same trend line, following the same levels, and making trades from the same point. Collective consciousness interprets the price bounce from the trend line as a kind of confidence signal. Therefore, the trend line itself works like a support level and plays an important role in turning the price upward. In such a situation, investors expect the price to bounce from the trend line and gain a new upward momentum, because each bounce from the trend line carries the potential to reach higher levels. At this point, it is necessary to understand the nature of the trend. An ascending trend represents not only the strength of buyers, but also the overall momentum of the market. Most investors see the price touching this trend line as an opportunity zone. Since the trend line has been tested and respected many times before, its reliability increases. Each touch confirms the strength of the trend line. For this reason, a price bounce from this point is interpreted as a sign of the continuation of the trend. The candlestick formations that appear when the price touches the trend line are also extremely critical. For example, the formation of a long wicked green candle shows that buyers stepped in strongly and pushed the price upward. Such price action reflects not only the linear support level, but also the spirit of the market. When investors see this signal, their belief in the continuation of the trend strengthens. In addition, trading volume is an important confirmation tool at this point. Increasing volume at the moment of touching the trend line proves the market participants' respect for the line, because higher volume shows that buyers are stepping in more intensely. This also strengthens the probability of a price rebound. Another factor supporting the likelihood of a bounce from the trend line is the structural nature of the market. Ascending trends generally appear in a healthy market structure. That is, the price does not only rise vertically but also makes corrections in between, forming a stronger base. During these corrections, touches to the trend line are like the market's breathing. The price approaches the trend line with declines and then buyers step in again to push the price upward. Thus, each touch both tests and strengthens the trend. As long as the structural cycle continues, the strength of the trend increases and investors' confidence is reinforced. From a psychological perspective, touching the trend line is the re-entry point for investors. Because most investors find it risky to open positions in the middle of a trend, they cannot predict where the price will turn. But when the price touches the trend line, it gives them a clear level. This level serves as a reference for both entry and stop loss. In other words, the trend line not only provides direction, but also offers a significant advantage in terms of risk management. Therefore, a price rebound from this level is valuable not only technically, but also strategically. When market dynamics are examined, it is often seen that after bouncing from such a trend line, the price makes new highs. Because buyers regain strength at the trend line, break the pressure of sellers and push the price upward. Such moves continuously confirm the strength of the trend. If the price after touching the trend line strongly rebounds and gains upward momentum, this strengthens investors' expectations and attracts more buyers into the market. This allows the price to accelerate upward. For long-term investors, the trend line is also extremely valuable, because this line shows the healthy upward movement of the market on a macro level. Even if there are short-term corrections, as long as the price continues to rise along the trend line, the big picture does not change. Therefore, touches to the trend line creates new buying opportunities for long-term investors. With each touch, the market shows that it maintains its upward potential. In summary, a bounce when the price touches the ascending trend line is extremely important for the continuation of the market's bullish scenario. This bounce confirms the strength of buyers, proves the solidity of the trend, and increases investors' confidence. At such moments, the market not only tests technical levels, but also reshapes investor psychology. For this reason, a bounce from the ascending trend line is a strong and positive signal that the upward trend will continue. But we cannot make decisions based on trends alone. So let's also take a look at other metrics. Keep watching.
The vortex indicator is one of the technical analysis tools used to identify the direction and strength of momentum in the market, and the blue line is generally considered the positive movement line, indicating an upward trend. In this context, the upward movement of the blue line signals to investors that buyers are gaining dominance in the market and that a possible uptrend is beginning. The blue line in the vortex indicator is a strong signal that reveals the direction and momentum of price movements. Especially when the blue line turns upward again, this significantly increases the likelihood of the current trend continuing and shows that market momentum has shifted back in favor of the upside. This movement is of critical importance for both short-term traders and medium to long-term investors. The upward movement of the blue line indicates that buying pressure in the market is increasing and selling pressure is decreasing. In other words, the price's upward potential accelerates along with the blue line, and the price may reach new highs with the support of this momentum. Since the vortex indicator measures not only direction, but also the strength of the trend, the rise of the blue line serves as both a psychological and technical confirmation for investors. The upward movement of the blue line in the market confirms the beginning of a trend and shows that buyers have regained control of the market and that new buying opportunities have emerged. At this point, the rise of the blue line and the subsequent price movements are important for understanding the dynamics of the market. The price reacts more strongly along with the upward movement of the blue line and may test previous resistance levels. If the price breaks these resistances during this process, the continuation of the trend is confirmed, and investors may consider opening new buy positions. At the same time, if an increase in volume is observed along with the upward movement of the blue line, this indicates that the uptrend will be even stronger and more sustainable. Volume is considered an important factor, confirming the strength and reliability of price movements. The blue line in the vortex indicator turning upward again does not only give a short-term bullish signal, but it also shows the change in market trend and that buyers have regained dominance. In this context, investors can predict the direction of the trend by observing the upward movement of the blue line and open their positions accordingly. Such signals are of vital importance, especially for volatile markets, because if the direction and strength of the trend are not correctly identified, investors may face unexpected losses. The rise of the blue line is also an indicator of market momentum. This momentum provides critical support for the price to break upper resistance levels and reach new highs. The upward movement of the blue line in the vortex indicator increases the price's trend-aligned momentum and creates a safe buying point for market participants. In other words, when the price is supported by the upward movement of the blue line, previously weak or hesitant buyers are also encouraged to open positions, and buying pressure in the market increases. This situation strengthens not only the short-term, but also the medium and long-term upward potential of the price. From a psychological perspective, the upward movement of the blue line positively affects investors' perception. Because when investors see that buyers are gaining dominance in the market, their confidence strengthens and expectations of the trend's continuation increase. This increases the number of active buyers in the market and enables the price to reach higher levels. Especially investors interested in technical analysis see the upward movement of the blue line as confirmation of the beginning of a trend and develop strategies accordingly. In addition, the rise of the blue line produces stronger signals when evaluated together with other technical indicators. For example, if the price is near support levels or a strong formation is about to be completed, the upward movement of the blue line further increases the likelihood of the price starting an attack. This makes the decision-making process easier for investors and reduces uncertainty in the market. In other words, the blue line in the vortex indicator functions as a critical tool not only as an indicator, but also in understanding the direction and momentum of price movements. The upward movement of the blue line also measures the strength of the trend. A rising blue line shows that buying power in the market is increasing, while the influence of sellers is decreasing. This balance of power allows the price to attempt new highs and for the current trend to continue. If the blue line stays upward for a long time and is consistent with trend-supported movements, a strong bullish confirmation emerges for investors. This confirmation makes buying decisions safer and strengthens market momentum. In conclusion, the blue line in the vortex indicator turning upward again is a critical signal for investors, indicating that a new uptrend has begun in the market. This movement confirms both the direction and momentum of the price, shows the control of buyers in the market, and creates new opportunities for investors. When the price is supported by the upward movement of the blue line, it can test resistances, reach new highs, and ensure the continuation of the trend. Therefore, the upward movement of the blue line is of vital importance in understanding trend changes in the market, identifying buying opportunities, and correctly guiding investor psychology.
A pennant formation is one of the most common patterns in technical analysis and usually indicates that after a short period of consolidation, the price will continue with a strong move. This formation is typically characterized by parallel or slightly sloping lines that form after an upward movement. The price fluctuates within the pennant for a while, moving between the upper and lower lines, but the main purpose of this movement is to determine the trend direction and give a strong breakout signal. When the price breaks above the pennant's upper line, it is considered a very strong bullish signal, and at this point, the price can rise as much as the height of the pennant. This height is measured as the size of the formation and is used to estimate the potential level the price can reach after the pattern is completed. A breakout above the upper line is considered a breakout signal for investors. This breakout shows that buyers have taken control of the market and that selling pressure has decreased. Breaking the upper line of the pennant is also psychologically important because it increases investor confidence and encourages them to open new long positions. Breakouts supported by strong volume are especially reliable for trend continuation. In other words, when the price breaks above the upper line, not only technically but also psychologically, it becomes likely that the uptrend has begun. The size of the formation is measured by the distance between the start and end points of the pennant, and if the price breaks the upper line, an increase of this size can occur. For example, if the formation is measured with a certain value, when the price completes the breakout, it can move upward by that amount. This is crucial for investors to estimate potential profits and is used to develop risk management strategies. The price having a potential increase of as much as 1,230% shows the strength of the formation and how effective the breakout can be. This has trend continuation. In other words, when the price breaks above the upper line, both price action and volume analysis signal that the trend will continue strongly. From a psychological perspective, breaking out of a pennant is an important reference point for investors. When the price moves above the upper line, it reduces market uncertainty and increases buyer confidence. This confidence encourages new buying and helps the price rise rapidly. Especially when evaluated along with technical indicators, this breakout presents investors with a critical opportunity to strengthen their positions and redefine their strategies. The 1,230% potential increase shows the strength of the pennant formation and how effective the breakout can be. Such a large increase proves that the trend is continuing strongly and offers significant opportunities for investors. Historically, pennant formations have been considered precursors of strong trends and have allowed prices to make significant upward moves in a short time. Therefore, a breakout above the upper line can affect not only short-term, but also medium and long-term investment strategies. The movement the price shows after the breakout is proportional to the size of the formation. This helps investors calculate potential profits and plan risk management. Since a pennant formation shows that the price will make a strong move after a short period of consolidation, the upward movement that begins with the breakout of the upper line confirms the continuation of the trend and creates a safe buying point for investors. Technically, breaking above the upper line of the pennant is considered a confirmation of a bullish trend. This breakout indicates that buyers have gained dominance in the market and is supported by a decrease in selling pressure. The increase in volume at the breakout moment confirms the strength and continuation of the trend. In other words, when the price breaks above the pennant's upper line, both price action and volume analysis signal that the trend will continue strongly.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.